Where are you now? VET, V-E-T, Toronto Stock Exchange. That stands for Vermilion Energy Inc. Okay, let me scoot over here. Create some black space. Where is this going to go? Let's define. Let's see where the monthly defined support is. Let's see where the monthly defined resistance is. Using those opens and closes. Those super duper nice candles. And 1650. Yeah, 1650. Where is it? Close 1650. Where am I going with that? 4650. And here's the support. So right now we're working our way. If monthly close above 4650 gives me an implied measured move. Using my classic chart trading framework of 42, 52, 45, and right below a wall. Previous support and resistance. Well, there was a small top here, maybe. Hard to tell. Either case, you're not going above important resistance. It's up here somewhere. So using my target considerations, it's all good for that target. If I wasn't doing the Secretwars and I want to play this on my classic chart trading framework, I'm just gonna wait a week and a half and just wherever this candle ends, say it stops here, enter here, put the sell stop below the wick. That's my risk, and my reward is from wherever it ends all the way here. Put my profit limit here, my buy stop here to enter, my sell stop here, or my profit loss, and that's it. That's all she wrote. Lock and load. Low risk to reward, but higher probabilities of reaching that possible target. So how about that? You don't need to fetch crazy risk rewards, 1 to 4, 1 to 8, whatever. Those are Hail Marys, guys. And if you look for those, then what your stats are going to look like, because I used to look for those, you're going to have a success percentage of reaching those probable targets of maybe 30 to 40% if you're good, and you'll have a whole bunch of washes, so lots of 1% NAV loss, lots of losses. And once in a while, if you're able to maintain your composure and reach that crazy target, that 8-to-1 target ratio, and then you'll be able to make up for all those missed out, those stocks where you didn't get to the price action, where it came back down, then you got triggered out. So I inverse that. I'm focusing now more on using my framework to make it more solid, in the sense that it can produce me higher probabilities of reaching possible targets, having successful trades, using monthly defined candles, monthly defined breakouts and breakdowns. Has done that. And it's great. Get whipsawed less. Stay in the trade. Better, cleaner signals. It's all good, guys. All right. Let's go see Stan. Secretwars. Revisiting Stan Weinstein. Thanks to his book, I'm still in business today. First time I ever heard about notions of risk, of money management, risk management. Doesn't spell it out like I'm doing it now, but he has a chapter on it. And before that, it was forums, penny stocks, crazy, hanging on the word of every poster. And somebody would say something negative about the stock I was in, then I wouldn't hear about it, respond negatively, and it's crazy, right? And it's a lot of it still happening today. People aren't on bull boards, they're on Twitter and stock twits, and a lot of it is still there. But through the noise, there's really, really competent traders out there. I follow them on my, if you go see my bad charts handle. I don't follow a lot of people, but the people I do follow, Solid stuff there. And go check him out, guys. If he's somebody acting with emotion, then stay away from that. Stan did not have Ichimoku Cloud. So let's just do it. Let's just be stupid for now. Removing Ichimoku Cloud. Hide Legend. Okay. This is my monthly. Whoa. What's that? Whole bunch of fundamentals here. Wow. Okay, you can't see that. All right. Moving on. So even on the weekly right here, look at that candle. That's twice the average volume. I always look at the candles. Twice the average volume in the previous 4 to 5 weeks. Even here, it started breaking out. This candle right here. So you already had some action. Stan remembers he likes having a 40-50% move already before you get in. Could have said maybe this was a breakout here. Maybe another one here. So breakouts after breakouts, making smaller patterns, making bigger patterns. It's all part of the game. Then you have the 30-week moving average starting to go up. This is pulling the price up. What's 40-50% more than that? 41. What? $20 more? $18 more? 41 plus 18. 58. See, Stan would he wouldn't mind seeing the stock go really higher before entering. Having that 30-week really starting to angle up, right? I keep saying that. You have a 30-week, let's say it's flat. You have equal chance of going up or down, right? Right away off the bat. But if you're already angling upwards, the 30-week moving average, before you go down, you have to go back flat, and then you have to go down, right? And to go up, well, you're already angling up, so that's where you're going to keep going. So that's the name of the game. Make sure 30-week average is already flat or going up. And if you're going down, you're just putting not putting the eggs in your basket there. Is that the expression? Because you're not praying, but you're gonna have to wait for it to flatten, and then you're gonna have to wait for it to go back up. Make sure it's already going back up. Trends in your favor. That's how you could define it. Just look at 30-week moving average, the angle, if it's positive or negative, and that's all you need to know. And let's look at the RSI. Stan uses Mansfield indicator. That's the strength of the stock versus the index it's in. I do not have that on my software, so I'm just using the RSI. And when I like seeing it going from halfway point going upwards. God, this is super nice, right? But what's the problem with this? Is there close overhead resistance on the weekly defined resistance? And there is some. And that's when Ichimoku Cloud comes in. Used by Isa Trader on stageanalysis.net. So what happens here? You could even see here. Let's try to go through resistance. Red cloud's resistance. Green cloud support. Whoa! Get stuck back in. All right, let's go. Let's try it another time. And could this happen again here? Whoa! And then get sucked back in. I wouldn't mind that, actually. I'd like to see it go up. This is my monthly defined. This is my breakout candle here. Almost no doubt, right? That crazy volume above a horizontal breakout line. I like to see it go back up, start going down on contracting volume, just a little bit like it happened here. It went up, pull back, contracting volume, a little scary, a little below that breakout line, and then went back up. If that happens here, so now I know what to expect. I have no fear. If there's no fear, there's no panic. I know exactly what I'm looking at. I'm going to keep this chart open. 1 to 3 months, usually the time before it pulls back. If it's on low volume, that even confirms even more my stage 2 breakout. All this stuff here, the buildups, the clues that the stock has been giving you. This is like a detective work. After that, maybe time's going to move on, and maybe we're going to break out here again, and to the moon. Shouldn't say that. That's emotionally attached sentiment. But I'm doing it in a comedic way, so that's okay. And then after that, we're out. And all this Ichimoku cloud defined resistance that was created by the price action previously, 26 periods before, starting to dissipate, and then we're off. There's nothing in our way. That's a nice stage 2. Right now it's pretty good. Somebody could probably enter here, and this is with last week's weekly close, and you could say, I'm good. And the important thing is, and that's the first, when I started doing stand back in 2007, 8, I just break out, right away breakout. And if I didn't get on the breakout, the price is too far, it's never going to come back. And but he says in his book that most of the charts pull back the breakouts, and we're just like, I'll focus on the breakouts, right? Because your brain, when you read something new, you focus on one thing, the one new thing. But when you reread, and even it says the last chapter, reread the book after a couple of years' experience, and then you'll see other stuff. Then when you reread the book, and originally you focused on all those breakouts, when you reread the book second time, you're already focused on the breakouts. You went through the jungle of getting on the breakouts and all that. Then you see the other things. Then you have a chance to absorb other details, the second and third and fourth layer of details that are there. And that's why you have to reread a book. It always has layers books. There's too much information in any book that you could read once and say, I know everything. Reread once, read once, experience, reread again. It's like school, guys. Remember? Theory, then practice, theory, practice. So now on my second or third time doing stand, now it's the pullbacks I'm really focusing on. Breakouts are nice. I'm trying to consider them just, cool, breakout. It's like another confirmation pattern. And then after that, then I wait. Could take a small position. But plus with the Ichimoku cloud right there, I would just wait. Wait for the pullback. And if that price action gets back to below, let's say 46.50 or close to, could put even another alert just a little bit above. I'm going to say, okay, guys, I'm in. If it's on contracting volume, of course. So vet.2, man, definite stage 2 right now. Early stages. If at the end of the month I get to have my close above 46.50, then I have my monthly defined breakout confirmed with my target at 52.45. So this is like everything's piling up for vet to go up. If you play on my classic chart trading framework, at the end of the month you could go in and then revisit the Stanway, and you could even get in probably on the Stanway if depending on the action, if it's through the Ichimoku cloud or not. Alright, guys, that's about the way I do it. Thanks for listening. See ya.